Good morning, students. Today we are moving on to the fifth semester, and I'm going to take the subject Customs Duty and Overview. The subject code is CX1572. Before moving on to the subject, shall we have a recap of what we have learned from the first semester to the fourth semester? We have learned different aspects of tax and related affairs. We all know that tax is the most important revenue generation source for every country. And it's not much different in our country also. Tax may be defined as a compulsory contribution from the general public towards the government to defray the services generated and provided to the public. In India, tax structure has been divided mainly into two categories: direct tax and indirect tax. We are going to learn mostly about indirect tax from fifth semester onwards. Our major area is to learn about indirect tax as a source of revenue to the government. Direct tax, let us see what it is. We have learned from the first semester to the fourth semester what is direct tax, what are the different heads of direct tax, and how it is collected, how it is computed, and how the general public is aware about direct tax. Direct tax is the tax which is directly paid by the public to the government. For example, income tax, wealth tax, corporate tax, etc. Indirect tax is the tax which is indirectly paid by the public or the customer to the government. For example, GST, customs duty, excise duty, etc. We have learned many things about direct taxes, isn't it? What are the things which are coming under that and all. Now we will be learn more about indirect taxes. There are different kinds of indirect taxes in our country: value added tax, central sales tax, service tax, excise duty, customs duty, etc. But today, most of the taxes have been combined into one single form of tax, that is called as goods and service tax. Value added tax, central sales tax, service tax, excise duty, and all have been combined into one, called as the goods and service tax. Even though all of them have been combined, the excise duty still exists. And from all these, customs duty stands alone and still is in force. We are going to learn more about customs duty. That's the topic which we are going to learn throughout this semester. What is a customs duty? How it is formed, how it was formed, how it is collected, and how it is computed. Customs duty, as we all know, it's the duty or tax which is imposed on importing or exporting of goods or services. If we import something into our country or we export out of our country, the government will charge an amount as tax. Before moving on to much areas, let's see some history of customs duty. During the ancient period, whenever a trader entered in the boundaries of a country for selling his merchandise, he offered some gift to the rulers or administrators of the country. Later on, this practice got converted into customs duty. As we are about that, India had trade relationship with many countries: Portuguese, Britain, Spain, Egypt, and many countries in the world have trade relationships with our country. At that time, India was ruled by king or other administrators. At that time, the rulers allowed foreign people to come to our country and to make trade. At that time, those people gave some kinds of gifts to the rulers or administrators. That form of gift was converted into the customs duty which we see today. These days, import and export duties are one of the major sources of a country's revenue, and all the countries in the world have imposed import and export duties also. The first codified act on customs duty was enforced in India in the year 1878. As we all are aware that the trade began through sea. The first act also came on such grounds. Sea Customs Act of 1878. Then the transportation and other things generated. Then only the tax on land exports and imports were introduced in the year 1924. Before that, a Customs Tariff Act of 1894 was also introduced at that time. By the invention of aircraft in the year 1934, the Aircraft Customs Act also came into existence. The Indian Tariff Act of 1894 was repealed and replaced by the Indian Tariff Act of 1934. Before moving on to further, let's see what is the Sea Customs, Land Customs, and Air Customs Act. These three acts said what and all products are to be taxed when they are being entered into our country or moved out of our country. And the Indian Tariff Act specified the percentage of tax which is to be imposed on such commodities. Okay, after the independence in 1947, all the customs duties which were prevailing were brought under one head. That is, the Customs Duty Act which we see today came into existence, the Customs Duty Act of 1962. The Indian Tariff Act of 1934 was replaced by the Customs Tariff Act of 1975, and which still prevails in the country. The Customs Act says what and all commodities or services or goods are to be taxed, and the Customs Tariff Act deals with the percentage of taxes which are to be imposed on such products. Let's move further. Let's see some of the constitutional provisions of customs tax. As we are aware that no law shall be passed in the country without an approval from the Parliament or the Constitution of India. Every law in the country is to be backed by any provision in the Constitution of India. Without such backing, no law can be formed in India. Article 245 of the Constitution provides power to the government, that may be central or state, to have legislations or rules to be formed. Article 246 governs the subject matters of law made by the Parliament and state legislature. The government which provides the basic awareness or makes the law to be enforced in the country has to be under any of the articles, that is 245, or should be governed by 246. The matters relating to the powers of the central and the state are being listed in the 7th schedule of the Indian Constitution. The 7th schedule of the Indian Constitution is classified into 3 lists, mainly list 1, that is union list. That means the items in which central government has the entire power to make legislations. List 2, that is state list, in which state government has the entire power to make legislations. The third one is list 3, that is concurrent list, which provides those items in which both the central as well as the state have power equally. The customs duty comes under the union list. Entry number 83 in the union list provides the power to the central government to levy duties of customs, including export duties. By such authority given by the Indian Constitution, the central government imposes tax on imports and exports. Let's see what are the bases of determining of duty. Import duty and export duty may be determined on the following basis. Two major aspects. One is called as specific duty and the other one is called as ad valorem duty. Let's see what is specific duty. It is a duty which is determined on the basis of a measurement of a good. The measurement can be anything, that is weight, length, breadth, size, or such type of any measurements. Ad valorem duty means the duty which is imposed on the value of a good. That means the monetary value of such goods. For example, let's see that there are two different things. One is a rock and the other one is a diamond. We know that both are formed from the earth, isn't it? But both rocks have different values. Therefore, a rock simply will be taxed if it is imported or exported, will be taxed on the basis of specific duty because it will be taxed on the basis of weight, ton, quintal, or some other thing like that. But in the case of diamond, we value it on the basis of its monetary value. How much is the monetary value of such diamond? That way it will be valued. There is a third basis also, which is called as combined duty or compound duty. It's a combination of specific duty and ad valorem duties on a single product. That means specific as well as ad valorem duty will be equally imposed on a product which is imported or exported. For example, the tariff on a product, if it is rupees 100 per quintal, like in the case of a rock which we are going to import. If we are importing 1 quintal of rock, then we have to pay rupees 100 for that as tax. If the same product is charged with an ad valorem duty of 5%, then it will be called as a combined duty, as I said earlier. Let's see how it will be calculated. Tax on a product which has a value of rupees 1000 per quintal. That means 1 quintal of rock will be valued at rupees 1000. As I said above, the tax for 1 quintal is rupees 100. Therefore, 100 will be specific duty. Rupees 100 will be charged as specific duty on 1 quintal of rock. As it's a combined duty, we will be imposing 5% of ad valorem duty on the value of the product. What is the value of the product? Rupees 1000. So 5% of rupees 1000, that is rupees 50, will be charged as ad valorem duty. Therefore, the compound duty will be specific duty rupees 100 plus ad valorem duty rupees 50. Therefore, the compound duty of the product will be rupees 150. Okay, so this is enough for today's class. We will be moving on further with next sections very shortly. Thank you. Thank you very much.